Hello, my friends. Welcome on our next webinar. And this webinar is about transversal patterns. So we already have had a webinar about trend continuation patterns, which was last Thursday. And today we will have trend reversal patterns webinar. For those who are first time with us, of course, we need a small introduction. Who is teaching, who is sharing knowledge. So my name is Tomasz Wisniewski. I'm a professional trader. I'm trading for over 12 years. And in that time, I did hundreds of seminars and webinars across the globe, almost on all continents. Yes, I like to share my knowledge, not only theoretically, but from the practical point of view. I love to share. I love to do live trading sessions, for example, where I trade live. I show how to open, close positions live. Of course, everything on real accounts, and of course, everything with profits month over month or quarter over quarter. So without further ado, let me show you the most powerful trend reversal patterns, and in those we have double tops and bottoms, head and shoulders, and triangles. It will be the same as on Thursday, so I'm gonna draw you. I'm gonna explain you everything from the theoretical point of view here on the board, and later we're going to move to the platform. We will try to look for decent trading occasions. I mean, not trading occasions, but those trend reversal patterns on the charts. So as I said, first are double tops and bottoms. All right. So today we talk about trend reversals. So we need a trend. This is a bullish trend. Price is making higher highs and higher lows. As long as the price is making higher highs and higher lows, there is still an uptrend, right? When the price stops to make higher highs and higher lows, it means that the downtrend starts. So we have high, we have a higher high, and then the price makes lower low, because so far lows were higher and this one is lower. Okay, so this is lower low, and this is a double top formation. We have another situation here in a downtrend. Price makes this and makes higher high, and this is a double bottom formation. Okay, so double top, double bottoms. Okay, if it was that easy, then in an uptrend, actually, we could see only double tops, and the trend would not reverse, trend would continue. So what is important here, what is very important here if you want to trade double tops and double bottoms, is divergence. Is a divergence of oscillator, of an indicator of your choice. This indicator can be RSI, can be MACD, for example. It can be stochastic. Different indicators, whatever rocks your boat. You can use any indicator. The marker is really nice. I like it, but most commonly I use RSI or MACD. So what about those indicators? You have an uptrend and price makes double top. First of all, double top has a neckline, depending from the previous price movements, but let's say that for this example, this is the neckline of this formation. And below, you have an indicator of your choice. Let's say this indicator is an RSI. And in general, it mimics the price movements. Okay? And you need a divergence. Let's go like this. You need a divergence if you want to trade double tops or bottoms. So you have something like this, then you have something like this. So you can see that price is making higher highs. First, second top. Second top is higher. And in terms of the oscillator, this one, which should mimic this one, is not higher than the previous one. And this is a divergence, and this is a sell signal. The same, my friends, goes with the downtrend. Price goes down. There is a double bottom formation. And there is an indicator. Right. Sorry. The indicator is going like this and like this. And what's happening here? You have lower lows, but they are not confirmed by lower lows on the indicator. Again, let's say it's RSI. Then all you need is the breakout of the neckline. In this case, let's say that the neckline is horizontal. So here you have a buy signal, and in theory, we should see further upswing. Okay. Double tops and double bottoms sometimes can be extended into triple tops or triple bottoms. Pretty much, as you may expect, situation is similar. So here is the neckline, and here is the indicator. And you can see price is making lower lows, but indicator is not making lower lows. That's a divergence. Breakout of the neckline of this formation brings us a buy signal, and in theory we should see the trend reversal. I guess this is pretty clear. We're gonna erase that. Head and shoulders and inverse head and shoulder patterns. Absolute classic. Bread and butter of the price action trading. Head and shoulders. We have this uptrend. Price is making higher highs and higher lows. Stops making higher highs. Stops making higher highs and stop making higher lows. Makes lower high and lower low. And this, my friends, is a head and shoulder pattern. As you can see, shoulder, head, and a shoulder. Shoulder, head, and a shoulder. Very, very important in head and shoulder pattern is a neckline. Even more important than a double top or bottom. So neckline is this base which connects the bottom of the shoulder and the bottom of the head and the bottom of another shoulder. And the breakout of this neckline is a sell signal. Stop loss usually above the right shoulder. And now what is happening very often, my friends, is that after this breakout, you don't forget about the neckline. You still have it on the chart because very often price makes a comeback to the neckline for the crucial test of a neckline as a resistance. Because it was a support for a long time, and after the breakout, it becomes a resistance. Bounce from it gives us a proper sell signal. It is very often said that the potential target for the head and shoulder pattern should be measured like this, like a base of the head to the top of the head, and you put this same line here, and this is the potential target for this movement. So like the distance of the head, but I don't think it works like this. Sometimes it's shorter, sometimes it's significantly longer. So I don't think it's a minimum target, right? So it's not the target; it's the minimum target of the head and shoulder pattern. Don't forget to connect the top of the head with the right shoulder. This can be also an interesting resistance. So once you will be in a position, you can lower your stop loss. You can have it above this line connecting the top of the head and the shoulder. Head and shoulders are awesome, really marvelous trading patterns, and I strongly advise you to at least look at it carefully. I'm not saying that you have to use it, although it would be nice if you would be using head and shoulders, but it's not a must. But they are really awesome, and they give amazing trading opportunities. They give great trading signals. Of course, there is a bullish version because this one is bearish, but there is also a bullish version of the head and shoulder pattern. So we have a chart. Price stops making lower lows and lower highs, starts to make higher lows and higher highs. And this is inverse head and shoulder formation. This is how we draw the neckline. This is where we buy. Very important notice, my friends. Only the fact that the price creates right shoulder does not entitle you to open a long position. Buy signal is triggered when the price breaks the neckline. Okay, neckline. This is the neckline, and when the price breaks the neckline, we have a signal. Because sometimes price makes inverse head and shoulder formation, traders go long, but the price does not break the neckline, bounces from the neckline, which gives us a signal. So breakout of the neckline, not creating right shoulder, not finishing the right shoulder, but breakout of the neckline is a sell signal only. Okay, very important notice, keep that in mind. These are head and shoulders pattern, my friends. Now let's move to the last one, last significant, last amazing trend reversal pattern, which is a triangle. And you should remember this from our previous webinar because I was talking about the triangles on the trend continuation patterns. So you may be wondering what this guy is talking about. Triangles at trend continuation or trend reversal pattern? Well, both. The thing is, so the symmetric triangle is like this, and the price inside is going like this. You may ask me, okay, so if it's both, how do we use it, and why should we bother if this if this can be a trend reversal or trend continuation pattern? So let's assume that we are going like this. Why should we bother? Because we are not trading inside of the triangle. This is no-go zone. Inside of the triangle, no. We wait for the breakout. So you don't buy or sell here because everything can happen. The price can either reverse the trend or continue the trend. You trade the breakout. If the breakout is not happening to the upside, price bounces from the upside and then breaks the lower line of this triangle, then here we have signal to sell. And very often, after the breakout of the lower line of this pattern, the price reverses the trend. When the price breaks the upper line of this triangle, that's a buy signal. That's, in this case, that's a trend continuation pattern. But in case of a breakout of the lower line, it's a trend reversal pattern, and this is how you trade it. So here there's no wishing, no praying about the certain movement. Here is patience. Here is waiting. Inside of the triangle, you wait for the breakout. You do not guess if there will be breakout to the upside or to the downside. You should not be bothered about guessing. What you should be bothered about is trading, is actually opening a trade, opening a position, and you do this when you have a breakout from the triangle. So that's it, my friends. Double tops, double bottoms, inverted and shoulder patterns, and triangles. Let me show you my platform, and we will try to look for those patterns right now. This is presentation, screen sharing. You are now seeing my screen. This is gold on a daily chart. For example, MACD. Look at this. Price is going, making lower lows, and makes this. If this low is lower, well, we can check this, but the second low has to be lower or at least equal. But you can see that maybe this one is not lower. So 1,730, 1,700 low, low 1,676. Here 1,676, 1,676. That's the low. So those lows are equal. The second low has to be equal or lower. And you can see that here we have a huge divergence in MACD. And this is a beautiful double bottom formation, and the price goes higher. Let's scan the history a little bit. As you can see, price can reverse the trend without double bottom or head and shoulder patterns. Okay, so it does not have to be present. But look at this. Beautiful upswing. First top, second top. Not this one. Price is making higher high. Is price making higher high in the indicator? No, it is not. That's a divergence. Maybe let's check another indicator. RSI, Relative Strength Index. Here also you can see that there is a divergence. So that's a beautiful sell signal, and you can see the reaction. Look at this. One top, second top. One top, second top. Indicator is lower. Here, indicator is lower. Divergence. Sell signal. You see, this low is not lower. It should be lower in order for us to consider it as a double top and bottom. Another one, silver. Most recently, we had the inverted and shoulder pattern. Left shoulder, head, and the right shoulder here. Breakout of the neckline. But you can see it was a false breakout. So it's sometimes happen like this, that you have a false breakout. So all this breakout above the neckline is green here. That's a false breakout, and false breakout is an amazing opportunity to go actually against this movement. Double tops and bottoms on silver. I have to do a bit of scanning here. This will be better. Okay, no. S&P 500. I really see here head and shoulder pattern. I guess you do as well. Left shoulder, head, and the right shoulder. Breakout of the neckline. That's what we said. Test of the neckline and a drop. Another one, my friends. This correction ended with inverse head and shoulder formation. Left shoulder, head, and the right shoulder. So look, we're going from inverse head and shoulder formation to the head and shoulder formation. Both of them work tremendously. Let's check this double bottom. 1, 2. This double bottom is having a divergence, of course. So price makes lower low. That's a correction. Here it's not confirmed by an indicator. That's a sell signal. This is a bit choppy trading, but you can see that price is making lower lows, but indicator is not. We have a reversal. But yeah, this is this Corona trading straight after the virus hit. Okay, DAX, American dollar, Japanese yen, Euro, Japanese yen, here, here, here. Oh, that's an interesting bounce on Australian dollar to New Zealand dollar. This bounce from a crucial horizontal support. Anyways, what we are about to see, double tops, for example. So 1 and 2. Let's check if we have a divergence. I bet we totally do. Of course. Price is making higher highs. Divergence on an indicator. Perfect. What's that? That's a triangle. Price is going higher. Correction, higher correction, higher correction, higher correction. This is a triangle. It could result in both. Trend reversal or trend continuation. There was no trend continuation. Price broke the lower line of this pattern and went lower. Beautiful, perfect sell signal. Swiss franc to Japanese yen. Left shoulder, head, and the right shoulder. Downswing. Head itself is head and shoulder pattern. So left shoulder, head, and the right shoulder. Absolutely beautiful. Downswing, left shoulder, head, right shoulder. Upswing, correction, upswing. Downtrend, inverse head and shoulder formation, uptrend. Okay, we had some volatile movements during our webinar. I'm checking them now. Yeah, on stocks, yes, on stocks I do have, I think, few symmetric triangle patterns like this. Upswing, symmetric triangle. There's black lines. There is no continuation to the upside, and there is drop. At the same time, that's a head and shoulder pattern, but it's common that symmetric triangle is a head and shoulder as well. Left shoulder, head, and the right shoulder. Breakout of the neckline, drop. Where else? Here is head and shoulder pattern, not prudential. Here, cholesterol, upswing, symmetric triangle. We don't have a breakout to the upside. We have a breakout to the downside though, and a drop. Beautiful. Airbus, upswing, correction, upswing, correction, upswing, correction, upswing. Supposed to be a correction, symmetric triangle. No, trend reversal. Boom. Beautiful. So you can see that those patterns work. Those patterns are present on the chart quite often. So why not to use them, right? I think now after the short webinar, you have all the tools that you would like to have in order to start using them. Of course, first on a demo account, because you should never try something new on a real account first. First, you open trades on a demo account or do paper trading. But later, why not? My friends, thanks very much for watching this webinar. Remember that we have another webinar on Thursday. We're going to start 1 hour earlier than today. I hope you will all attend our webinar on Thursday. I'm looking forward for it. Thanks very much and all the best in your trading.